All right, starting off, Gabor we've already become very familiar with. He gave us an introduction in the previous panel. Richard, I've known for many years. So we were actually both based in Asia, and we're pitching Bitcoin to institutional investors many years ago. Richard, can you maybe provide a very quick introduction, and then we'll jump into the topic?
Yeah, sure. Thank you, Jesse. So I was an investment banker, as Jesse said, in Asia for about 18 years. Working predominantly at Nomura in derivatives, convertibles, and anything equity-linked in the capital markets space. Jesse mentioned we met in 2017, starting to pitch Bitcoin to institutions. But that was when I joined a crypto company, and that was sort of late 2017. We listed that company on NASDAQ and through a SPAC, and then Binance came to buy the company. I stepped down, and I ended up joining a alternative asset manager here in Switzerland called Seize Capital, where I look after the hedge fund business. And sorry, if someone's shouting at the back, would you mind not shouting so much, because it's confusing me. I think someone's shouting at me. So yeah, run the hedge fund business there, and we now are the largest allocator to crypto hedge funds in the world, and we run about 500 million in Bitcoin-denominated crypto hedge funds. I've been involved in the Bitcoin Treasury space as a commentator for some time, explaining the different financial products that Strategy uses as a convertible bond guy for many years. A lot of people struggled with that and understanding that. And I'm now involved in two soon-to-launch Bitcoin treasuries, one in the UK and one in Switzerland.
So what would you say is the fundamental value proposition of Bitcoin treasury companies? Is it providing access to some of these people that are maybe restricted by their mandate from investing directly in Bitcoin? So I think famously, probably bond guys mostly for MicroStrategy. Is that kind of the value proposition, is access?
So I think access is one thing, depending on which particular capital pool you sit in. I would say that, you know, to broadly understand the capital pools that are being accessed by these companies, and obviously Strategy is doing this one of the best, is to understand that really what we're seeing is an unwind of the fiat Ponzi, right? So a lot of money has been pushed into the financial markets through quantitative easing and pushed valuations to crazy levels. You know, if you're an equity portfolio manager today, trying to outperform the S&P, if you don't have Nvidia, Tesla, Amazon in your portfolio, you're in trouble. But from a valuation perspective, it's really hard to justify some of those positions. So what do you need in your portfolio? Well, we all know, everyone in this room probably knows what you need in your portfolio. You need Bitcoin, right? And the fact is that you can't just buy a Bitcoin ETF if you're an equity portfolio manager, because that kind of defeats the object of you actively managing a portfolio. You can't buy ETFs. So you could buy a Japanese hotel business, or a business intelligence business, or a graphic design company from Guildford or wherever SmarterWeb comes from. But the point is that that allows you to get Bitcoin in your equity portfolio and drive and outperform the S&P, for example. When you're a bond investor, it's even worse. You're investing in bonds that will guarantee to lose you money in a real rate basis. So, you know, I live in Switzerland. Anyone who lives here as well understands the real problem you have in Switzerland. Rates are zero. They're about to go negative. The real rates are way negative. The 10-year bond in Switzerland pays 27 basis points, right? Imagine trying to run a pension portfolio on a 60-40 with that as your profile, right? You need an interest rate backed by the CAGR of Bitcoin. Again, everyone in this room, I'm assuming, knows that on a 5-year basis, if you look at the compound annual growth rate of Bitcoin over any period, you try and choose the very worst period, you're looking at a compound annual growth rate of 25 to 35%. Okay? The best case, 150%. So the point is that if I can borrow money at 5% in Swiss francs for 5 years to 10 years, then I'm almost guaranteed on a historical basis to be able to outperform that with Bitcoin. And so this is the way that these Bitcoin treasury companies are starting to tap into the different capital pools. And that also includes volatility, by the way. You know, convertible bonds are based on pricing of volatility. You know, if you look at what money printing does, it kills volatility in the market. You know, VIX trades at all-time lows. But Bitcoin still sustains some level of volatility. So if you're a Bitcoin treasury company, you have a volatility that is much higher, and therefore the vol traders, the convert traders, they want your paper, right? And so this is the point. This is allowing the fiat Ponzi to unwind into the asset that is obviously going to help change the way that we look at financial markets.
Adam had a comment earlier today about a lot of the kind of animal spirits in the market being directed at Bitcoin treasury companies. And I think we haven't, one thing unique about this cycle is we haven't really seen kind of the altcoin frenzy we've seen in previous cycles where it's altcoin or DeFi or NFTs or monkey JPEGs or whatever. Do you agree with that assessment that a lot of the kind of speculative energy in this cycle have been directed towards treasury companies? And is that a problem at all?
I would say so, yes. I mean, Smarter Web, I think when I looked at it first, was trading at a 50 times MNAV, so that's a multiple to the NAV of Bitcoin that they held, and that was clearly a little bit over the top. I would say that even, you know, Metaplanet at a $4 or $5 billion company at the time was trading at a 8 times MNAV up until pretty recently. That's getting extended. And so you've now seen all of that completely collapse. So we've witnessed a mini Bitcoin bear market in the Bitcoin treasury space over the last 2 to 3 months.
Does that mean it's the end of Bitcoin treasury companies?
I don't think so, no. Yeah, look, I mean, I steal a story from Eve at Tobam. He often tells the story that a few hundred years ago, a bunch of businessmen got together, created a company, and put gold on the balance sheet and started raising more money to keep doing that. And that company still exists today, and it's called the Bank of England. And this is where we are going. I do believe that these companies will be the base of the financial system and the banking infrastructure that we will see around Bitcoin. So, you know, a lot of Bitcoiners get upset about this. Oh, you know, it's financialization of Bitcoin. Like, honestly, this is where we were always going to go. If you're going to see a peaceful transition from traditional fiat finance into Bitcoin, this is what needs to happen. And this is the release valve to allow that to happen. So, yes, we've obviously crushed to 1 times MNAV. And, you know, I was explaining to an investor this morning who just couldn't understand, why would I pay a premium to hold a company that is essentially an ETF? And the answer to that question, very simply, is that this is an optimized ETF. Okay? This is an ETF designed to grow Bitcoin per share every year, right? Every week, in fact, right? And that is the key here, right? You're looking at yield on your Bitcoin per share versus an ETF which is bleeding Bitcoin per share every year, because you pay fees every year for your Bitcoin ETF, and all it does is just decrease the amount of Bitcoin that you hold against it. So the next question is, why would I pay any kind of premium? Because there's all sorts of clowns trying to run a Bitcoin treasury company right now, which is true, right? Obviously, fast money, and you talked about the ICO craze, is attracting some of the wrong type of people, opportunists, failing companies. They're like, oh, let's just put Bitcoin on the balance sheet. I mean, GameStop, perfect example. Go out, tell the market you're going to raise $2.7 billion to buy Bitcoin. You only buy 500 million, right? That's the sort of behavior that it doesn't instill trust, transparency, the rest of it. So there will be failures along the way, but the right teams with the right level of financial engineering capability, the right understanding of what to do in different MNAV environments is critical to keep driving the growth forward and eventually lead to every country in the world likely having its own Bitcoin treasury company.
So how do we evaluate this from an investor perspective? You mentioned the ability to do the financial structuring, the right management team. How do people as investors kind of split off the micro strategies and then everybody else?
I feel like I'm talking a lot.
No, just go for it.
I
don't have strong opinions on this part of the
So, yeah, look, I mean, as I mentioned, I'm involved in the design of a few of these companies, and we look at the best in class across the world. And strategy, obviously, as I mentioned before, is tapping all the different capital pools. That is exactly the right way to be doing this. And in Switzerland, obviously, there's a very interesting bond market at 900 billion that is struggling to achieve any kind of yield, right? What is Metaplanet doing really well? Well, Simon Jerovich is a derivatives trader, and he understands that when you combine a cash flow from an at-the-money essential synthetic operation of selling equity into the market at a premium to MNAV, combined with a put underwriting program, allows you to keep creating premium even though you're buying Bitcoin anyway. So using short-dated options allows you to keep getting even more Bitcoin on your Bitcoin stack. We are going to see soon the first public Bitcoin Treasury company start using some of the hedge fund strategies I talked about in my introduction to gain very low vol risk essential return in Bitcoin. So 4 to 6% is very achievable from very low vol, low risk strategies. That's going to start to be something that people implement. But then again, the different capital pools around the specifics to that country. So Smarter Web Company, not probably the most impressive bunch of financial engineers because they're two little graphic designers sitting in a garage in Guildford or whatever it is, but they're tapping a 1.25 trillion pound self-directed pension pool that's not allowed to buy Bitcoin ETFs. So they had that huge demand which helped drive them, and I think the UK is going to be a very interesting market for these types of companies. Capital B, the French company, what did they do well with the backing of TOBAM is they did Bitcoin-denominated convertible bonds. There are some things that need potential changing in that because now they're in a situation where they're trading at a very low MNAV and they can't, at a discounted MNAV, buy back shares to sell their Bitcoin because actually all that Bitcoin's spoken for in debt obligations. So there's some things that they can change in the structuring of those converts. And that's what I mean, is taking some of these lessons and the financial engineering from Capital B with Bitcoin-denominated product to allow these companies to move forward in any different type of environment. So these are some of the best-in-class plays, and then, of course, there are many lessons from the not-so-good players as well.
And what about the idea of Bitcoin treasury countries, right? I think this also applies to sovereign issuances, right, and attracting those kind of sovereign investors that are looking to juice their yields with Bitcoin exposure as well. Gabor, do you have any thoughts on that?
Yeah, obviously.
The Bitbond concept.
Yeah, so I think El Salvador is leading there, obviously, and they've been adding Bitcoin to their treasuries, and they're better for it. And what they're doing is they're simply buying it as an asset that holds its value. I think that's the honest way of doing it, as opposed to over-financializing. I don't have problems necessarily with leveraged and preferred shares and borrowing from the market, but I think it's not for the average country and it's not for the average investor. I think the honest way to access Bitcoin is you either buy a spot Bitcoin product or, again, I was the original architect for the first asset manager application for a Bitcoin ETF, so I think that was an honest way to financialize and simple way to financialize Bitcoin with relatively low fees. And then the traders I work with, and I consider myself also a decent trader, that like to do their borrowing and lending by themselves or access the derivative markets. My problem with these products that are out in the market is that they are packaging risk and not really disclosing the downsides well enough for the average investors to understand. And that's one. And then two, operationally, I just, if you have a company that's a business intelligence company from Virginia suddenly becoming a Bitcoin trader, that to me is just a huge red flag. And, put Bitcoin on your balance sheet if you like it as an asset. But like, if you're doing bond market trading, then market yourself as a bond market leveraged derivatives company and become a hedge fund and be regulated as such and disclose things as such. And again, to go back to the country point, I think, like El Salvador is doing this in the honest way. They're putting Bitcoin in a fund and they're stacking to the benefit of the country. And I think companies and countries should do the same thing. Again, I don't know if that should necessarily be a trade. And again, this is not for me to dictate, and there's this value for quant traders in it. But I think there are simple ways and more straightforward ways to get exposure to Bitcoin. And with respect to just like bond traders and certain asset managers and aggregators not providing access, and I'll give you one example, to Bitcoins, spot Bitcoin or spot Bitcoin ETFs, and they are doing leveraged or Bitcoin treasury companies. I think that's just dishonest from them, and that structure will unwind. So one example, and I was pretty public with it in the talk with the Vanguard CEO on this too, Vanguard does not allow you to buy a Bitcoin ETF. They hold billions of dollars of MicroStrategy right now to get the same exposure, and their clients get exposure that way. And they say, well, Bitcoin doesn't have cash flows, MicroStrategy has cash flows. But MicroStrategy is trading Bitcoin to do this, and they are a Bitcoin treasury company. So I think there's some fundamental dishonesties that need to go away from the market, and eventually it will happen. And usually what I say to companies, like if I meet a company that lists, for instance, Vanguard, a Bitcoin treasury company, but not a Bitcoin ETF, they will not get me as a client, because I think that's a dishonest way to market products. So that would be, again, maybe a little bit extra information beyond countries, but there'll be one view I wanted to share.
I think,
Richard, thoughts on that?
Yeah, maybe I'll just add, I think, I agree with a few things you said. Obviously, not all of them. I would say that MicroStrategy strategy is not a trader of Bitcoin. They are an accumulator of Bitcoin. I think that you're absolutely right about debt profile and LTV that a company is running, and you need to be extremely careful about that. And I don't think that people should assume that every company is running its debt profile in the most responsible way, and that needs to be a part of the research into these companies. When it comes to the question about country, I actually do think that infrastructure financing around energy infrastructure, essentially with Bitcoin mining at its core, is a very interesting way for countries to rid themselves of the IMF. I mean, look at Argentina in terms of the amount of resources that country had. If they started, and this is why I was very keen for El Salvador to actually do their Bitcoin bond, which they still haven't done, unfortunately, because that would really show the playbook for every country that is choking under this IMF control. And I think that Argentina is a really fantastic example of what a country could, of a country who could completely change their profile with infrastructure financing around Bitcoin mining and bit bonds that would free them of the IMF. And I didn't mention in my introduction, but I'm an advisor to Jan3, and I help them with a number of countries across the world. There's one particular country that we're working on in Central Asia. I can't disclose the name of it, but I can tell you that this is hopefully going to be the first project where we actually do the Bitcoin bonds and show the playbook for the rest of the world.
That's great. I couldn't agree more. I'd be very excited to see that. Unfortunately, we're running very tight on time today, so we'll have to wrap it up here. I'd like to open it up for maybe one or two questions, and then we'll let Gabor go. I know he's pressed for time. And then we'll move on to our networking reception. Questions on Bitcoin treasury companies?
Thank you. So I'm an ex-board member of Swedish Bitcoin Association, and I am actually a head of a publicly listed treasury company. And I heard that you said that there is no way to get a cash flow on Bitcoin. That's actually incorrect. So treasury companies can deploy their Bitcoin on the Lightning Network and sell it as inbound liquidity to exchanges, to payment processors, to anybody in a non-custodial way. And this is technically possible to do. It's an early market. So what are your thoughts on that?
That's new to me. I haven't heard of that before.
Is that a DeFi protocol?
No, that's the Bitcoin protocol.
Okay, I've not heard of it.
Yeah, I think generally not your keys, not your coins. There's usually some lending or change of ownership that happens once you start earning yield, and that is fundamentally a different risk profile. So that's usually my stance. Do it if that's what you want to do, but you know, whenever you're earning interest, you're lending something, you're changing, your ownership changes hands. And again, while interesting and financially doable, investors should be able to evaluate appropriately what the risks are behind it.
Yeah, I would say that a diversified approach to these types of strategies is probably not a bad thing to do with 10 to 20% of the stack, but I generally agree with Gabor, like you need to be taking a very, very prudent and conservative approach to that. Unfortunately, I can't comment on the protocol that you're referring to.
It's essentially liquidity subscriptions, and it's Lightning, so there's no counterparty risk. So you basically charge for the capital to an entity.
My question, how about recently the Bitcoin Treasury company stock been coming down, especially the MNAV is, you know, the MNAV value is shrinking. Even now, MSTR, MicroStrategy, is almost approaching 1. I believe it's 1.1, the MNAV. So what would you see in case strategy break into below 1? What happened to the whole Bitcoin Treasury company?
Well, much as everybody thinks that Saylor is a religious zealot on Bitcoin, he is practical enough to understand financial markets, and he mentioned recently, I think it was in August or maybe September, at the Bitcoin On conference in New York, that in a worst case scenario, he would sell his Bitcoin. And in that case scenario, if you go below 1, you sell your Bitcoin, you buy back shares, you arbitrage the hedge funds that are shorting your stock. And from my experience with hedge funds, they don't like being arbitraged too much. They like to be the other side of that trade. So you essentially floor your MNAV at 1. But to answer perhaps directly your question, Jack, I think that MNAV premium and sort of sentiment is like a pendulum. It's like the rhythm of markets. As I said, we've experienced this very extreme bear market approach to the Bitcoin treasury companies. That will come back, and we're finding the floor at the moment. Now, a lot of this has been driven by very bad investors coming into the space, short-term minded investors with these pipes and discounted raises. And you know, one of the things that I always advise any company I'm involved with, if you're doing things at discounts, you're attracting the wrong type of investor. We need long-term minded people that understand the full vision of where this is going, and that will help correct things.
Yeah, maybe
okay, thank you. Go ahead. Sorry.
I'll say just being the pessimist and said negative things, but there's one, putting my trader hat on, there's one positive thing to say. And if you look at the bonds, and they are long dated, right? So the actual cash that, or if any coupon rates are available on those instruments that are due, are not due for a long time. And the amount that is due is usually in the low single-digit % compared to the actual treasury. So there's a lot of wiggle room for a Bitcoin bull market to occur, which would drive MNAV and a few other things. So that's I think that's a positive thing.
Yeah, I think Strategy's first convertible put is coming up in December 2027. And so that's $1 billion on a market cap of wherever we are today.
Great. Well, thank you. Thank you very much, guys. I think this was an interesting discussion. Thank you, everyone, for joining today. We're going to wrap it up here today. And I hope to see everybody at our networking event. Thank you.